Welcome, everybody. Let's check in. Welcome to a new live stream for the NIO earnings. As you can see, I'm not at home. I'm actually at the airport. So let me do a quick technical check. Let me know, please, in the comments whether or not you can hear me clearly. I hope the background noise isn't too bad. Right, NIO admirer. I'm late because I'm literally traveling. I'm at the airport today. Let me see. You guys can hear me? Okay. I hope the background noise is more or less okay. Just quickly share that I'm live streaming on YouTube or on Twitter, I should say. Just a second. Meanwhile, I'll welcome everybody for joining us in this live stream today. As always, this is first a live stream on the earnings report. And then in just 1 hour, I'm also going to jump and cover the management call. I expect everything will work out despite streaming from the airport here. And then later on, I have to go and catch my flight. So let me just share it on X before we get the live stream filled with people. As always, if you're a subscriber and more than a year, you can actually comment in the comment section. If not, I would urge you to subscribe to the channel so that you can not only stay up to date, but also participate in the comment section in future live streams. Okay, going to be ready in a moment. Just give me a second. Here we go. Asian Fish is saying no sounds. Is that correct? Now got 180 people joined, so let's start. As always, I just first go through the top line headlines here. And for everybody who joins us later, this is a live stream, so it will also be available as a recording. And later on, I'll also cover the management call, so stay tuned for a separate live stream on that. And now I'll first go through some of the first takes here. So this is Seeking Alpha, which I usually use for the headline that we get. Here is NIO Q3 beats on the top line estimates and initiates the Q4 outlook. So interestingly, they say revenue beats by 10 million. Do they say something about the bottom line here? No, don't say that. Okay, let's quickly read through. Vehicle deliveries were 61,855 in the third quarter of 2024. So representing an increase of 11% from the third quarter 2023 and an increase of 7.8% from the second quarter in 2024. So we knew that growth number already, right? The company delivered 20,976 vehicles in October 2024. We also know that already. Vehicle sales were 2.37 billion in the third quarter. More on that later. It's a decrease from the third quarter of last year of 4% and an increase of 6.5% from the second quarter in 2024. The vehicle margin was at 13% in the third quarter. So compared with 11% in the third quarter last year and 12.2% compared to the second quarter in this year. So you can see the vehicle margin has improved. And then cash and cash equivalents, I'll talk about this at $6 billion. And then for the outlook, they expect deliveries to be between 72,000 and 75,000 units in the fourth quarter. So now that's kind of the headline. I think the stock is down around 5% in the pre-market. We'll see. I think that will largely depend on how the earnings call is going. And now what I want to do next before I jump into the actual report is, before I jump into the actual report, I will go into my personal estimates, which I had in my personal business case, and compare them to the actuals. Again, if there's some issues with the sound, I apologize for that. I'm sorry, I'm currently not at home. I'm on the road, I'm traveling. I'm going to fly out of Berlin today, so I'm trying to do that on the road. I hope you guys appreciate that still, and I hope that it's working fine, that you get the gist of it. Now, let me switch my screens and give you my personal estimations that I have in my Excel sheet. As you can see in red, here are the estimates that I personally had versus the actuals. Let's make that maybe a little bit more polished for a second. So these are the two tables that we need to have a look at. And as you can see, it's quite mixed. My personal estimations, have to be honest, I have to be honest, have been a little bit more positive or bullish going forward. There's good parts and there's bad parts in my estimates versus the actuals. And I will quickly show them to you. So the weaker sales, the estimates that I've had were a tiny little bit higher than the actuals. But as you've seen on the headline that I showed before of Seeking Alpha, the analysts out there actually expected lower weaker revenues than I had, or at least for the total revenues. I have to say, like, being off like 20 millions or something like that isn't that much. So I could say the revenue estimates that I had with 2.67 billion versus those 2.66 billions are pretty much in line. So that's not a big miss or beat in any ways. Yeah, definitely. Most of that is known going into that, right? But I would say it's largely what everybody out there has expected. So that's so far so good. Revenues for the cost of sales and the margins. I think this is where I personally had a better idea of where the vehicle margins are going. So the sales margins, these are essentially the vehicle margins. That means, in order for NIO to sell a car and produce the car, the difference between that, this is kind of the profit on each of the cars NIO is making. That's the vehicle margin. And in my opinion, I thought we could have went up to 15% there, and that's based on some guidance that we've had in the past. NIO guided in previous earnings calls that they expect to get the vehicle margins up to 15% by the end of the year. So of course there is still Q4 coming up, but I thought maybe they already do it in Q3. Happens that it did improve. So up from, I think, what was it, 12% last quarter, now to 13%. So it's an improvement. It's just not as much as I personally expected. So this results that in the fact that the costs of sales have been in total a bit higher than my personal estimations. Again, it's off around 40 million. So that's not a lot. And so I think it's neglectable in that sense. But I watch the vehicle margins as a kind of a healthy KPI, key performance index to watch of what I think is important to see if the company is going into the right direction. Or you can say it is going into the right direction. However, not as fast as I personally assumed it would. Okay. The same thing can be said about the gross margin. It's arriving at 10.7%, so it's an improvement. However, I calculated more bullish with 13%. So what we can see here is the research and development expenses have been okay, in line, around 500 million, but there have been far greater selling and general administrative expenses. I only had 400, so I put total operating expenses at 900 million. They have been actually more than 1 billion. So that's quite significant, 150 million of a diversion here roundabout. So despite the fact that NIO here is moving to the right direction when it comes to the gross margin improvements and the bottom line improvements, still, I was thinking we may land actually even below 600 million in net losses here, whereas in fact we stay at around 700 million. So pretty much it's not the same as last quarter. There's also some implications of how the dollar is moving up, I think. So despite the fact that we have improvements on the vehicle margins and the gross margins, still there is pressure on the net losses. And that's where my personal estimations have been too bullish and off. And I think the analyst estimates, I put them in there, has been more accurate. So they have been estimating 670 million in net losses. So I've been below that. It's actually coming in a little bit higher even. But you can see it out there. The analysts have been largely quite negative on the estimations of the net losses, right? So I think maybe that's explaining also a little bit how the NIO stock is moving. We've seen how NIO stock has been really not performing well in the last couple of weeks, and usually the market is smelling out something, right? So maybe they have, been just more skeptical on NIO and those bottom line metrics there. But overall, I would say what should be maybe a surprise also to analysts, and certainly in my opinion, it's a surprise. I thought we would end up at a cash balance of 5.2 billion USD. However, we actually get 6 billion. So that's significantly more of a cash cushion there and the cash balance. So in a sense, although the net losses are not showing the improvements that I personally would like to see, but the financial bottom line here with the cash balance is much better than I personally expected it, right? So it's basically given us even more than a quarter with the same losses in additional runway. So, this is where it's good and bad, and where my estimates have been off on several indicators. However, I would sum it up here as I think most of that is in line with the estimates of the analysts out there generally with these results. And I think largely we can see with the margin improvements and the cash balance improvements that the company is here in a rather healthy situation, in my opinion. Let's look at some more key performance indicators. By the way, let me just check out again. Yep, exactly. Here's a comment. Free cash flow positive. That's exactly the reason why the cash balance has been better than what I personally anticipated. So they managed to work with the working capital and so on, and the financials on the cash flow have been just much better than in my expectations here. So that seems to be fine. Again, if you're new, we're now at 350 people in the live stream. Welcome everybody. This is my first live stream where I go through the earnings report, and later on I will do a second live stream covering the management call. If you're wondering why there's background noise, why maybe there is some issues with the connections, it's because I'm currently traveling. I'm at an airport. I cannot, promise to have the same setup as at my home currently. I apologize for that, but I hope everything's working out quite okay for you guys. I remember once on a live stream where I was driving on the Autobahn in an ET7. This time it should be actually a little bit better here at the airport. So thanks everybody for joining. Once you're subscribed for more than a year, you can actually, participate here in the live stream and add comments. And I would appreciate if you subscribe, become maybe a Patreon member in the future or a member of this YouTube channel, share this live stream on the social network, and give me a thumbs up here for doing that even while traveling. So let's continue with the key performance indicators that I'm watching here. So one is Vico average sales price. The estimates, so based on my personal estimates, have been around 39,000 for the average Vico price. It's actually landing just right there, a little bit lower, but I would say it's quite okay. I think the most important thing here to watch is so this is the line of the average Vico selling price over time, and you can see it has come down to 38,000, 37,000, 37,000 over the beginning of the year. So that was Q1, Q2, Q2, and it's now starting to recovering, right? It's at 39,000 still. So that tells you the effects of the price war in China have now largely been resolved for NIO, and they are not competing on, bringing down the vehicle sales prices. And that's good because if the vehicle sales price is staying level, while, as we can see, the vehicle margins are growing, that gives us more profitability per car sold. We'll see how this will turn out in the future because now we get a new product mix with Onvo. But as for now, as I can say, this KPI is, I think, in line and a positive one. For the SG&A per vehicle sold, another metric that I'm watching is basically I want to get an idea like how much it takes NIO to sell cars in terms of marketing spend, infrastructure build out, or other initiatives. Or some of that is going into SG&A. And I have personally estimated, as I said, that they will be spending around 400 million. Turns out they spent 585. And I said that this is the part where it's missed my personal estimation. So actually per car sold, it's gone up to 9,600 US dollars that they're spending in SG&A for each car sold, which is worse than my personal estimates. However, again, if we're looking into where this has traditionally been, it's actually on the lower side of the numbers. If you look into where it's been in 2023, right, it's been far more than 10,000 USD per quarter here per car sold, actually up to 16,000. And now we are consistently down below the 10,000 range. So this number at 9,655, I think, is a good number. It's not bad, although still I have been more bullish on that. But it's not worrying me. It's telling us that NIO is managing to sell vehicles well. I think it's also an indicator of demand. So it's telling me that they don't need to go out there and sell vehicles at any kind of cost. That both the ASP as the marketing per vehicle sold type of metrics seem to be in a healthy range, in my opinion. Okay, so that's something I'm watching. Now, for the full year growth, this is going to the guidance that I have put out there. They expect a minimum of 72,000 in Q4 deliveries and a maximum of 75,000 of Q4 deliveries. So for the full year, this would bring us between 220 to 223,000 vehicles delivered and a year-over-year growth between 27.5 to 28.5 percent year-over-year growth. So that's not shabby if you are acknowledging that the whole industry is currently almost flat or down. If you look at Mercedes-Benz, BMW, Audi, they have year-over-year declining sales. While for Tesla, it's, for example, pretty flat. And now for NIO, it's still almost 30% year-over-year growth. It's certainly not where some of the bullish projections out there have been for this year. But I have not been in that camp and said, like, Onvo will be ramping up very fast in the beginning and will bring us to very large growth numbers. I always said, look, this will take more time. And so I think this year-over-year growth is totally fine for where we are and not concerning at all. It's actually quite good in the bigger picture of where things are. Now, let me actually jump into the report. So this has been, my personal estimations and the KPIs that I'm tracking. I hope this is clear to everybody. And again, I appreciate for tuning in. And if the sound and connection isn't perfect, that's due to the fact that I'm live streaming from the airport. I hope it's working for everybody. And if you're tuning in late, this is a live stream and will be available as a recording later on the earnings report. I will make a second live stream for the actual earnings call later on, which I think will be important as well. Now, let's jump to this news release by NIO. So I basically already gave you all of the numbers that are in here. Let's see if we can find some important stuff in there, or maybe don't find it in there. For example, there is still no news, for example, also not in the other sales of the business or anywhere else that we have received any type of remuneration for the license deal with 47. As you may be aware, NIO's investor from Abu Dhabi has not only taken a part in NIO as a company, however, they also have invested in a company called 47, which will be a stealth startup currently and will be licensing technology from NIO. And I'm expecting that this will actually help NIO in the long run because we will be receiving royalties, revenues, and so on for that. I'm not seeing anything in there. Correct me if I'm wrong. I haven't seen it in the CEO and CFO comments. Maybe we hear about that in the earnings call, but so far I don't see it anywhere in there. So I'm expecting for that fact that it hasn't gone into our earnings report here. And in that sense, that's a good news because that means it will still be coming at some point in time. Another thing which I haven't seen there and for quite some while now is NIO, the credits which they can sell, right? So NIO is selling pure BEV, and other automakers, in order to receive to be compliant with a CO2 guidances, need to buy certificates. And we sometimes see that really helping the Tesla earnings. And I think it's been more than a year. So I don't have the number now for sure, but it might have been more than a year since the last time that I've seen NIO actually reporting those CO2 certificates. And I imagine that they're piling up them still, that they're still piling them up and might be selling them in the future. So both the 47 and the CO2 certificates haven't, in my opinion, not helped this earning report currently and are still kind of uh, maybe at some point trickling into those balance sheets and earnings reports in the future. At least that's what I'm hoping. Let me know if you have any other information. As I said, I'm traveling right now. I'm trying um, to report to you as accurate as I can. By the way, as always, do your own due diligence. I'm not a financial advisor, and I'm not telling you that I know that I have the crystal ball and that I know the future. But I'm, just giving you my personal interpretation of what I've seen so far from today. Now, um, let's go a little bit into the CEO and CFO comments. What I found that I would like to highlight here is the last sentence here is we expect this momentum will drive continued improvements in the company's operational and financial performance. It's actually the first time that I see such a statement by I think it's possibly coming from the CFO, where they are actually telling us that they expect the financial performance to improve in the future. And what will that be? It will obviously be what we now can see happening, improvements of the margins, and also possible improvements to the net income and on the bottom line of the business. Okay. So putting that in here, I think is sort of a bullish outlook that they're giving us. And I think it's kind of paving the way of um, hopefully a 2025 in which we will see the first profitable quarter. I can tell you, this is my personal expectation. I think in Q4 2025, I expect NIO to break even for the first time. Um, that's based on my personal estimations of how I think NIO sales and the margins and the costs will be developing over time. I could be wrong on that, but what we certainly want to hear, and we may hear about that in the earnings call, is that they have a plan for achieving profitability in the future, right? And so I read this statement here as a kind of a prelude to that. So maybe for the first time, they're really telling people out there, look, guys, we have soon a product portfolio out there which is complete, which is very competitive, which we can scale up, and we focus next on the company financials. And by the way, we still have 6 billion in the bank, which is better than my personal estimations, as I said before. So I personally don't expect them at the current point that they will go out and raise new money again. As I mentioned, also they have other ways of tapping into the markets right now, which they've done in the past with raising capital within China, both through bank loans and also getting investors into local entities of NIO, plus what I pointed out, of course, 7 deal, which may bring in funds basically from the same investor that is already invested in NIO and has an interest that NIO as a company is doing well over time. So I think these are options which NIO is having currently before they actually need to tap into the new market. So what I'm expecting for 2025 and what I'm seeing kind of outlined here in this earnings report is that the future focus will be on the operational side, on the financial bottom line, on heading towards profitability, and also on the scale of the existing product platform, which I think we'll be hearing more about in the current earnings call when it comes to the improvements of the current NIO platform, which might be going to the NT 2.5 platform, which would be essentially the cockpit of the new NIO ET9, so the next platform, the big platform upgrades, the NT 3.0, but based on the current existing models, how they are manufacturing. So kind of mix between the new and the old, but it's helping NIO in a way that they will have an upgraded model line soon for the next year. I'm expecting more about that in the earnings call. Now, I think that's for the most part what I'm taking away from this earnings report. So all in all, pretty much in line, as I mentioned. It's not super exciting. It's not terrible at all, in my opinion. It's just what it is. I think it will depend a little bit more on what we hear in the earnings call, how the market will react to it. As you can see, the market has been fairly negative on NIO going into the earnings. So we saw a lot of front running in a negative way in heading into these earnings. So we'll see how things will pan out here. But overall, I'm personally not worried about these earnings. I think it shows that NIO has a plan and that everything is kind of within the boundaries that have been to be expected. But maybe let me take some comments now here by you guys. Joseph saying my year-over-year growth percentage is off on your feed. That might be why the case. Maybe you can let me know. Last year we had 160K deliveries. Really, 160K deliveries last year. Are you sure about that? Let me double check. That's the thing with doing those things live here. I'm kind of doing everything in between that. So we're heading from 160 to about, let's go to the lower line, 250 at 220. You're right, Joseph. We are closer to 40%. So there is an error in my calculations there. Thanks for pointing that out. It's awesome to have you guys on board. So you're right. It's more about, it's closer to 40% of year-over-year growth, which is great. So this is good news. And thanks, Joseph. I know you're a very active contributor in the Patreon community to helping me out on this one. As I said, I cannot fully guarantee you for all of the stuff that I'm putting into the Excel sheet at this point in time while traveling and having not my home set up here. So I hope everything's, despite that, is good. Let me go through some more comments here. There's some comments by Michael about the profitability in 2025. Yeah, it would be nice to hear more on that by the CFO and CEO in the earnings call. As I said, this statement, this tiny sentence was in there in the actual report, but I expect the earnings call is rather the place to talk about that. And as I can just say again, my personal estimation is it will be the first profitable quarter in Q4 2025. And so, Sangha, this is your question about the narrowing of net losses. I think ideally we already get that in Q4. I have to double check with my personal estimations, but most likely we'll get it in Q1 with a lower net loss because in the end Q1 will also be a a quarter with less volume and such. So naturally, the net losses will be lower, right? Um, but overall, what you're hinting towards is obviously the more incremental improvement in net losses versus the actual growth in the top line, right? And I think yeah, that should be the case as well in 2025. But we are very keen on hearing more about that, definitely, in the earnings call, right? Gavin, I'm sorry about the poor sound. I'm live streaming from the airport. For everybody who's just tuned in, I'm sorry about that. I hope you can appreciate that I'm well, kind of between flying out of Berlin and still doing this. By the way, I've got a second stream coming up in half an hour. So at 1, they have set the earnings call in which I will be live streaming the earnings call as always. I hope it works with the technical setup to give you the sound of the earnings call, and then I add my comment on top of that. James has got a question if I think NIO will meet the Q4 guidance. Personally, I do believe they will. So the guidance has come in my opinion, fairly conservative. I do also think by the recent statements that we got from also the Onvo CEO that they will actually achieve the target of 10K Onvo deliveries in December. So that will obviously help the overall deliveries and such. So that's my personal opinion. But yeah, who knows? I mean, definitely the last couple of weekly reports, right? We had the issues with the license plates registrations in Shanghai. We had the issues of Onvo not delivering as fast as people have expected, but I have always assumed that. So for me, it's not really a super big surprise. And I have to say that the guidance which they put out there for Q4 now is not even um, or let's put it otherwise, it's even below my personal estimations that I had initially for Q4. So yeah, I do expect that they will actually meet that then. Yeah, at least my hair checks out. It's a bit blurry. Yeah, sorry again. It's on the road. I hope the sound isn't too bad and that you get at least the gist of what I'm saying here. So again, to wrap it up here from the earnings report, I would say it's been largely in line with the investor expectations out there. I think it has been uh, below my personal estimations, but I have been more bullish than the analysts' expectations out there. So fair enough. On the other hand, there is not only bad news, there's also good news when it comes, for example, to the balance sheet and like the cash on the balance sheet. And I have to say that also the improvement in the weaker and gross margins is going into the right direction, just not as fast paced as I personally expect with that. Still, you got to say what NIO is pulling off here in an industry that is currently not missing targets in terms of uh, the legacy automakers who are struggling in their financial reports and their deliveries overall. Uh, NIO is doing quite well in that regard, and they're pointing out that they have 40% of the premium EV market in China, which is great. Now the big question, obviously, here is how much will Onvo help us going forward, right? Onvo, they said, will be the new growth driver, but at the current point, I think it cannot be because the scalability is not there yet. It needs some more time. They do have very big announcements for the Q1, Q2, the early half of next year, which I find a bit ambitious, to be honest. I expect them to be on point with the December deliveries. That would be an important KPI to watch, but we have to consider that Q1, Q2 is always a bit the weak side of the year. So having very, very big estimations for that for next year with Onvo in Q1 and Q2 is a risky gamble there. But we'll see if they can manage that off. It will tremendously help because that is usually the more quiet part of the year. Okay, so let's see. As always, this is kind of a risky part. NIO stock is very volatile and very risky. But overall, you got to say what they're doing is impressive in my point of view. So what is this here by Marcus? Any news about the updated delivery numbers? Nice, there have been some deliveries missing from Shanghai. Um, no, I expect that NIO by the end of this month and going into December will actually show a trend of much better weekly deliveries. So far, what I mentioned in my last video is speculative, where I just have the indicators that people are complaining that they didn't get their cars delivered because of some license plate issues. But I haven't got any official news to that. Maybe it will be part of the earnings call if an analyst really cares about the weeklies. I doubt that, but this might be a way to find out. Otherwise, it's speculation at this point in time. But given the outlook which they put out there, and then I think that they will meet the 10K for December. Based on that, I expect a rapid improvement in the weeklies going forward. And we also have to say that the weeklies are put out there by the auto and are not really the real numbers, okay, that will be reported in the final deliveries in the reports by NIO. So you need always to consider that. So Gavin, one question on the cash. Do you feel we need to raise more money? So currently, as I said, the balance sheet or the cash position on the balance sheet is much better than I personally predicted. So that's one of the good takeaways at around 6 billion. And Um, I'm personally expecting improved net incomes in the future, and I expect them to not having to tap the markets again until reaching profitability. I know this is kind of almost the best case outcome then, but you have to be aware that they just have a very big cash cushion. Of course, they also have um, big net income losses at the current point, but I don't expect that to continue going forward. So, in my opinion, first profitable quarter in Q4 2025, and maybe the first full year in 2026. And based on the information that I got today, plus what I mentioned before, they have even other ways of getting additional revenues like CO2 certificate sales, the 4/7 revenues coming in, maybe NIO battery swap partnerships revenues trickling in, plus raising money locally through just normal bond issuances or even normal credits. Tapping into the credit, not the credit markets, but taking on debt. Plus the next option, what they're also doing, um, you know, having investors participating in the local companies in China. So all of that are ways of tapping into money currency, which would not need them to dilute shares more on the US stock listed stock basically. So that's my personal estimation. I know there are others out there who are saying NIO is going to tap more market again and raise money, but it's not my estimations and my expectations. We will see. We will be right on that in the future. Quick question about the NIO houses. Maybe I can tell you a personal anecdote. I've been just back to the NIO house in Berlin very recently, and I was very pleased to see the development of the NIO house in Berlin in terms of the usage that I saw, and also now that I'm basically become a dad and I have my little baby with me and was able to go to the kindergarten in the NIO house and Miriam participating also in some activities for kids and so on taking place in the NIO house. I do see all of that potential there, and I don't think it's a bad way of allocating marketing. Then I even don't think it's a bad decision to stay in the European markets at the current point in time and have NIO houses operationally and so on. I think the large part of the expenses for building those NIO houses are now in the past, and I think it's a good way, a different way also to traditional automotive industry to raise awareness, to build organic growth, to have influencers come to NIO houses, talking about it, making activities and events. And ultimately, it's what makes NIO much different from the business model and ecosystem perspective, which I really, really like. So if you're not happy with NIO houses, then I think you should sell your NIO stock, because then you are frankly invested in the wrong company. It's part of the NIO business model. And personally, I think it's a good way for marketing spend. And I just shared in my patron community yesterday that, for example, I saw in the Expon earnings that they have more than 600 stores in China. And so if you divide the sales that Expon is doing currently by the 600 stores, they're selling half of the amount of cars than NIO, compared to NIO per store. So it's telling you that NIO houses and NIO spaces are actually very good at selling cars. They're selling double the amount of cars per store than an Expon. And that's despite the fact that the NIO cars are far more expensive, right? So in general, NIO has less stores than Expon in China. And that's an indication, in my opinion, that the sales efficiencies are quite good, and that even your houses and your spaces are a good investment and marketing channel. So that's my personal opinion. Obviously, we can disagree with that, but um, I don't buy into people's opinion who say that your houses are a waste of money. Okay. Okay, and maybe a couple of last questions that I'm taking here in this live stream before I will actually, you know, um, go ahead and prepare for the second live stream, which I'm now going to make publicly viewable. Which is set up in the back end of my YouTube. Okay, so as a quick reminder, if you've just tuned in, thanks for watching. This is the live stream on the new earnings report. I went through the general takeaway here by the media, then went into my personal estimations versus the actuals, and then talked through the earnings report and gave a couple of insights there. This live stream will be available as a recording later on. There will be a second live stream in 15 minutes on the earnings call, and I will be covering that as well. Again, I'm here currently at the airport, so I hope the connection is fine. I hope the audio is quite fine. I apologize for that, but there's no other way for me covering this event today other than doing it here live from the airport. And now, last couple of questions that I take before hopping over to the earnings call is, how will the onboard sales be presented in the future? Will average cost of sale and all be mixed as separate values? It's a very good question. I think in the financials, most likely they will be consolidating. So we will have a couple of facts of that. For example, the lower average sales price deriving from that in the future, because obviously Onvo is a lower priced car. Then also we don't know yet about the vehicle margins in the beginning. NIO has talked about them. They might be very similar to NIO in the future once everything is fully built up and scaling. However, in the beginnings, it might not be as efficient as NIO in the current stage, right? So there might be some effects of that trickling down into the NIO earnings reports, and also we don't fully know yet how much will be also on the cost side, for example, building up stores and such. So that would be interesting to see, and maybe explaining some part of the negativity on the NIO stock currently, and maybe why investors have been going into this event so bearish and so skeptical and have had such low estimations. Compared to my personal estimations, for example, like how I mentioned. But in the end, those low estimations have been granted to be right because, as we've seen, they come in right in line with the estimations out there. So, yeah, we're going to see how they're going to report that in the future. Definitely will be necessary to differentiate in the analysis of the NIO reports later on between NIO and Onvo, see them separate, but overall, I guess the financials will be aggregated. Surprised by the positive free cash flow? Yes, indeed. I'm surprised by that. It's a good development. Yeah, it's good to see. I didn't expect them to have actually a higher cash balance than last quarter. So it's great. Right. I think I have to tune out here for now. So to prepare for the next live stream, which will be the earnings call in just 15 minutes. Maybe quick answer to, do you feel there's any chance of a new Tesla agreement on Office D? No, they're both going their own way. I think at the current point, NIO does have a more advanced autopilot in China than Tesla has in China. On a global stage, it's something different, but I don't see any reason why NIO should tap into FSD currently or in the future. Good. So thanks everybody for tuning in. It's awesome. We almost had 400 people at some points in this live stream, and I hope it was okay with the audio and so on. Now be sure to jump over to my earnings call report as well, and I'll get you covered there in 15 minutes. Thanks everybody, and see you soon.